Well, if there is reigniting of inflation in the United States, it will be an issue for the United States, for sure. And I think that's where the first and prime consequences will be. As far as we are concerned, when I look at inflation, and I've seen the full cycle, I started my job with very low inflation, interest rates in negative territory. And then we saw it just climb to 10.6% at the most, and we are now down to 2.4%. And we are confident that we are seeing inflation at target in the course of 25. So I've seen the full cycle.
It's been wild.
It's been the Wild West of inflation over the last 4 years. But we are I think now confident that target is in sight, that the disinflationary process continues, and we are not overly concerned by the sort of export of inflation to Europe. There will be interesting phenomenon that we will watch. The exchange rate, for instance, will be of interest and may have consequences. But we are certainly interested to see the US grow, because growth in the US has always been a favorable factor for the rest of the world.
We spent a lot of 2024 anticipating policy divergence, but do you think that was simply just delayed to 2025? Could that be a big feature this year?
No, we do have policy divergence in terms of monetary policy, because we certainly did not reduce rates at the same pace. Markets anticipate vastly different monetary policy moves in the next few months. So we do have that divergence that has to do with a different economic setting at the moment between the US and Europe.
Now, some of the members over at the Governing Council were debating a 50 basis point rate cut at the end of last year. I spoke to about 3 of them saying it should be a point of discussion. They were worried about growth, and in fact some of them were worried about keeping that 2% inflation target over the medium term, that in fact you could be undershooting. Your own chief economist, Philip Lane, was acknowledging too that perhaps rates need to keep coming down. To your mind, what is the risk of price stability and some of the downside risks that you could face this year?
We're not anticipating that, and our baseline is certainly not delivering that kind of threat. But, risk is to the downside when it comes to growth, and we'll have to be very attentive to the data that we are receiving, collecting, and analyzing to see what needs to be done. But we are on this sort of, regular, gradual path. Disinflation is coming through. We'll be looking very carefully at services, at wages, at the sort of what we call the late comers, like insurance and things like that, to see whether the early months of 25 deliver the reduction in service prices that we anticipate. Gradual, slow, but declining trend. That's what we are anticipating.
It does feel as though that heat and services is still hampering the ability to move forward and at a faster pace with rate cuts. If that data point magically changed, could that mean the ECB is behind the curve with the rate cuts?
With ifs you can anticipate anything, but I think that and our forecasting capacity has now significantly improved, and we've had regular, repeated forecast in terms of inflation, and we have not revisited forecast very much in the last 5 set of projections. So we are more confident, but we do not see ourselves behind the curve, and if our baseline holds, I think the anticipation that we have will put us on target, and our target is 2% medium term, sustainable. We want it to be sustainable, and I think that we are well positioned for that at the moment.